Ladies and gentlemen, good day and welcome to H2 FY24 earnings conference call of Beta Drugs Limited, hosted by Phillip Capital India PCGS. As a reminder, all lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Renuka from Phillip Capital India Private Limited. Thank you and over to you, ma'am.
Thank you, Steve. Good afternoon, everyone. On behalf of Phillip Capital Private Client Group, I welcome all of you to the H2 FY24 earnings conference call of Beta Drugs Limited. Today from the management, we have Mr. Rahul Batra, Chairman and MD, Mr. Nipun Arora, CFO, and Mr. Ashutosh Shukla, Director of Sales and Marketing. I now hand over the conference to Mr. Rahulji for his opening remarks, and then we will open the floor for Q&A. Over to you, sir.
Thank you so much. Good afternoon, everyone. Welcome to our earnings call for FY2023-24. Let me take you to a brief what we did last year. The total sales of the company stood at 296 crores as compared to 227 crores in FY22-23. The consolidated EBITDA was at 61.5 crores as compared to 53.88 crores in FY22-23. The net profit also increased from 30.7 crores to 36.4 crores. Although seen a decline in the EBITDA margins, the financial outcome in terms of EBITDA percentage decline is only due to the fact that there had been a high raw material cost of platinum, which has accounted to almost 15 to 17% of the total sales. Platinum, as we all know, that it is a derivative of platinum and gold price. Also, due to the fact that our new cosmetology division has posted a net EBITDA negative of above 4 crores last year. The total standalone oncology EBITDA, excluding cosmetology loss, is at 65.4 crores, which is close to 22.8%. Going ahead with the strategy, we are more focusing on the rest of the products, rather focusing on platinum and ensuring to bring back EBITDA margins between 24 to 26% for this financial year 24-25. I would like to address personally today that our cosmetology division has given a sales of more than 1 crore and is marginally profitable. The same trend will continue this year and we will achieve a minimum sales of 14 to 15 crores for FY24-25. In this journey, we will be in a position to create new brands, what we created in oncology in the coming 4 to 5 years down the line. Now I'll take you to the key highlights for FY23-24. This year was a very, very excitement year for us. Recently, we had an audit from Eurasia. Eurasia is an audit which covers Russia, Armenia, Belarus, Georgia, and Kazakhstan. This was one of the toughest audits we faced after in visa. We are proud to say that we have cleared the audit and we have got a registration certificate from Eurasia. The second key highlight and the starting point was that we have started our first ever cytotoxic syrup suspension facility. This is the first ever facility in Asia, Africa, Europe. We have also introduced in this facility the first suspension, that is magistrol acetate suspension in the domestic market. This product has got an increased excitement in terms of doctors and we have gained a respective market share in magistrol acetate. Not only this, bringing the NDDS to the market has increased the market size for this particular product. In this particular year, we have also filed 6 more approvals in suspension and syrup segment. We are hope to launch these products this year, provided we get the approvals in time from DCGI. Going to the export highlight, we have got 53 new registrations last year, for which the business will start coming from this year. As you've seen, the growth in the export market is on a higher side. This is only because of the new registrations which we have received. They have also launched cosmetology pan-India with a field force of more than 100 people, catering to almost close to 6,800 doctors. So this was the key highlights. Now coming on to the segment-wise business and way ahead. Let's start with the most important segment, that is the own brand. Last year, we increased our sale by 27%, and where we have this has been primarily being focused with the launch of 7 new products, mostly out of which 2 or 3 products were in the last quarter. It has substantially increased the sales and will become this will further increase the sales and will become a trusted brand in the coming years. We've also focused, our key focus area was to bridge the gap between oral and injectable business. Earlier, this figure was 61 by 39, but this year, especially in FY2023-24, we have bridged the gap between injectable and oral business to 43 to 57. We've also strengthened our hematology portfolio by adding 2 more products last year. This will continue building as there is a huge scope lies in the hematology segment. Out of both the segments, if we talk about the solid tumors and the hematology, the scope and the future lies in the hematology segment. For the future roadmap, we have also identified the targeted markets which will drive our sustainable growth for the coming years. This has already been shared in the presentations which we have uploaded last evening. Coming on to the international business, as discussed in our last calls, there is a huge upside potential lies in the export market. Last year, we further added 1 more approval, that is Eurasia, which was one of the toughest we faced. As discussed earlier, we have got 53 new registrations, for which the business has already started coming and will be in a free flow for the next coming year. Going ahead, in the international market, we have already applied 350 plus registrations which are in pipeline, which might get approvals in coming 2 years down the line. Looking at the future of the export market, there is a huge scope and a huge gap for us to cater particularly the regulated and semi-regulated markets. As discussed in our last call for the EU GMP, we have got the confirmation that the audit is going to happen in September, which will further add lot of sales and international collaborations, as we see that there are not many generic players, generic regulated approved cytotoxic plants available in the Indian market. India being the generic pharmacy of the world and catering to almost around 70 to 80% of the formulation requirement of the world, so cytotoxic is one of the key catch for all the regulated markets. Coming on to our CDMO business. In the CDMO business, last year we have shown a big growth as we have added 3 more new clients in our portfolio. There, some existing clients have added around 7 to 8 new products, and we have added 3 new clients which have delivered a huge upside in our CDMO business. Going ahead in the CDMO space, we'll continue growing and keep on adding the new products to provide best and the most innovative and qualitative products to our partners. Coming to our third segment, that is our API. The API business last year has grown by 30%. They've also hired one of the best teams in terms of production, quality assurance, quality control, and regulatory. As on today, we have 3 different lines for different capacities. As we are in the cytotoxic markets, we all understand the requirement might be for 1 kg or 10 kg or even in grams. So we have, as in today, we have 3 separate lines to meet out these different requirements. Last year, particularly, we had been focusing more on the quality aspects in the vision to make API business at par with our formulation business. The key highlights of API, we have developed and launched 7 new products last year. We've also prepared 6 DMFs, which we are filing in the Brazil market in next month. We have also strengthened our R&D department by hiring more professionals and more competent people. Also, to start with, we have started a very small amount of exports in the API business. Coming on to the most important and all, the cosmetology segment. Last year was a bit of learning and hiring year. As you all are aware that a brand can be created if you have the right team and at a right place, along with a great direction. Last year, we did exactly the same. And as discussed earlier, we are happy to announce that we have achieved 1 crore sales in April, which is the minimum benchmarking for the FY2024-25. We aim to do plus of 14 crore sales this year, which will certainly add a profitability to Beta. Our division name for cosmetology is Inspira, which actually inspires us to put more efforts in creating a brand. FY23, we have added a respectable number of prescribers and put our reach to more than 6,000 customers pan India. Slowly and gradually, this will emerge as strong brands, and in the coming future, as we have already planned to come up with our own manufacturing unit by FY2025-26. Today, the total number of SKUs are close to 14. We intend to increase the number of SKUs by 30 to 35 by end of this FY24-25. With having our own manufacturing facility for derma and cosmetology, this will strengthen and create a more market for our current team. I would like to conclude by saying that we have done the best till now, and we have also laid different strategies to make Beta the most profitable company in the coming years. This will definitely be backed by a strong and robust research and development in both API and formulations, which will give us an edge in the market. I would end by saying, when we are in a journey, the speed breakers will come, but after speed breakers, there is always a smooth ride. Thank you, and we welcome all the questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dipesh Gandhi, an individual investor. Please go ahead. Mr. Dipesh, your line has been unmuted. Please go ahead with your question.
Hi, Rahul and team. Can you hear me?
Yes, I can hear you.
Yeah. So first of all, congratulations on delivering a set of numbers that we are definitely proud of. I would like to go first with the first question. So basically, Tata Memorial has initiated, a movement wherein it is going to buy bulk cancer drugs for, almost all hospitals. Any idea how it may affect our company's sales or, forecast going ahead?
Yeah. For this question, I'll ask Ashutosh to answer, please. Ashutosh?
Hello.
Is there? Yes,
Hello.
Ashutosh.
Yeah.
Yes.
Can you hear me? Yeah. So Tata Memorial Hospital is the biggest hospital in the country. Yes, they are going for the bulk purchases, but this is not going to hamper our trade business. As such, our business as of now in Tata Hospital is zero. And basically, we are very strong in corporate and private hospitals. So that is not going to affect us. Because not only the Tata, even the state government hospitals, they go for the bulk purchase. And as far as tenders are concerned, we are going to participate, and definitely, if they are going for bulk purchase, definitely we'll participate, and we'll also get the share of it. So ultimately, at the end of the day, it is going to benefit the company.
Okay.
We being the manufacturer, definitely participate very aggressively.
Right. I'm assuming our cost will be at bare minimum, and they'll definitely consider it. Yeah. So second question, if I may ask, what are the capacity utilizations as on date, and what are our plans for getting listed on the main board?
So the capacity as on date for beta drug is close to around 60%. For Edley formulation, we have added one more injectable line last year, and it's currently at 40 to 60%. And again, migrating onto the main board, we have already initiated the process. Maybe next 2 to 3 months, we'll be migrating onto the main board. Before our first quarter ended, we'll try to be on the main board before our first quarter ends.
Okay. Thank you so much. Thank you so much, Rahul. And once again, congratulations for the set of numbers and the kind of growth that you are delivering. Thank you very much.
Thank you.
Thank you. The next question is from the line of Chirag Jain from Yoga Capital. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. Sir, I was trying to go through your business. It has multiple complexities which I couldn't understand. So please, could you give a brief about your business before moving ahead?
Business, we have 4 verticals. And one is our own brand, one is our CDMO, one is our export, and one is API. So this is the current export verticals, or this is the current verticals we have. So we have a dedicated team for our own brands, and we have dedicated team for exports. We have dedicated team for API business. We have a dedicated team for our CDMO business. So the CDMO business is being taken care by around a team of 7 people. Our own brand, we have a team of around 67 people, and export, we have a team of around 4 people, and all this is being headed by Mr. Ashutosh, who is our Director Sales and Marketing. Then API business is particularly on the sales side, it is looked upon by a team of 2 people.
Okay. Understood. So you mentioned that export is currently very low. So what will the range would be? Can you give some range?
Export, we did a top line of close to 41 crore this year.
41 CR. Okay. Understood. Sir, can you repeat the revenue guidance that you gave for FY25?
Sorry, for FY24, right? The top line you're asking? FY25.
Yeah.
We will keep on growing at the same rate at what we mentioned in our earlier call. That will be 25 to 30%.
Okay, got that. Also, sir, you mentioned the PPT mentions about competitive intensity increasing in the market. So could you highlight something on that?
No, we never mentioned about the competitive increase in the market. Rather, we just mentioned about our presence, our focused areas. So the competition is there in the market. It's for every business, right? But since we are the one only focused oncology company, we have certain special advantages. It is not only about the formulations. Since we are backwardly integrated, that gives us an edge. And not only this, we are in certain products, we are the first one to launch in the Indian market. Last year, there was one product which became off patent, that was Olaparib. So we have taken a huge market share once we launched that product, as we were the first one to launch that. So this is the same strategy. The products which are becoming off patent, we have a list of products. We already developed that. There are certain products we'll be launching this year also, and we'll be taking that advantage.
Okay. So assuming for that product, sir, what would be the erosion that hello?
Mr. Chirag, I would request you to please follow up in the question queue.
Okay. I'll fall back in the queue. I have more questions.
Thank you.
Thank you.
The next question is from the line of Bhagwan Chaudhary from Shubh Capital. Please go ahead.
Yeah, hi Rahul. Congratulations for very good set of top line growth, for the consistency in the revenue growth and numbers across. Just two questions from my side. One is on the cosmetic side. What are the unit dynamics right now? Means if you can just explain the kind of fixed costs associated with it currently, and what are our gross margin in this business?
Okay. So the total cost, if I'll ask Nipun to question that, because he's having the more control on the numbers. Nipun, can you just brief that? But the margins, I will explain you. The margins, the total gross margins which we are getting in this division is close to 65%.
Okay.
And Nipun, can you just give a brief about the cost, please?
Yeah. So, hi, Mr. Bhagwan. As Rahulji said, the margins are close to 65%, rather 65 to 66%. The other fixed cost associated with this is somewhere around 70 lakhs per month.
And this is associated with your employee cost and the marketing cost.
See, I'll just explain you. It's mainly the employee cost, because earlier, as FY2022-23, we had a team of only 42 people. But now, as of today, we have a team of more than 100 people. So this is totally in line with the employee cost. And if we are in a process to make a brand, first, the most important thing for any pharma company is to avoid attrition. And in last 4 to 6 months, preferentially, we have avoided attrition, and the people are consistently going to the market and representing the same company always, to the same doctors. So this has added, this particularly, this cost will remain the same, and once the number will increasing, we'll see the profitability coming to this division as well.
Perfect, you're right. Secondly, if you can highlight that, do you have any capex plan in the long term, the next 2 to 3 years? Any big capex plan?
Okay. So the first and the foremost capex plan we have is that we have to come up with an hospitality plant, and which will be initiated by 25-26. We'll come up with the production of that. As you know, that pharma, particularly in hospitality side, if you go to a doctor or you go to any market, you have to have number of SKUs in your basket. So today we are operating with only 14 SKUs. So we want to increase the number of SKUs to 40, 50. And this can only happen if we have our own manufacturing unit. As on April, we'll go through the first quarter. So once we are sustainable and we are creating margins out of it, and as we have done in April, so we'll going on for the capacity expansion in dermatology side. Then second, we do right now till the sales of 500 crore for oncology side, we don't need any further expansions or any other further capacity expansion for this. The only investment we will be doing in acquiring the MAs once we are through with our EU GMP audit. So we'll not be following up the process of registering the product. Rather, we'll be buying a MA and launching the same product in a lesser time as we go all out for the dossier registration. So these are the two capex areas. One is acquiring the MAs, and the second is coming up with our own manufacturing site for dermatology and cosmetology.
And what can be the size of that capex for cosmetology?
For cosmetology, it will be close to around 30 to 35 crores.
Got it. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Santosh from Investment Handle. Please go ahead.
Hi, Rahul. Thank you for the opportunity and congratulations on delivering the consistent numbers year over year. Question is regarding the raw material. As you mentioned, the margins have gone down a little bit because of the increase in prices of platins. So do you procure raw materials from other countries like China also, or is it in-house manufacturing? Just want to get your thoughts.
So platin, So platin is basically one product line which we cannot manufacture in-house. Today, 70% of our APIs are being produced by ourselves only, which we are backwardly integrated. But as you know, pharma is so big, even cytotoxics are so big that you cannot manufacture everything in-house. So platins we source from outside, and there are only two companies in India right now who are manufacturing this. One is Hetero Healthcare, one is Frizzes Kabi. So we are procuring from them. And see, it's not like we have seen that, because if we go for a chemotherapy treatment, carboplatin and cisplatin is the basic treatment. And tomorrow we are becoming a partner with any good CDMO player. So the first product they will ask for is carboplatin only. But last 3 months, fortunately, last 3 months, we have seen the prices have declined, and we will be more focusing ourselves towards on the other product line rather on the platin side. Other products, there have been no cost increase. There have been we have negotiated well from our KSM suppliers, and the API costs have decreased. So if you go on a consolidated balance, if you go on an individual balance sheet also, Agri Lab margin has also increased. So this is one turning point, and we as a company has laid down a strategy to focus more on the oral side. So that's why on my initial talk, I discussed about shifting our focus from injectable to oral side, because prescription business is always a long-term business.
Okay. And on the cosmetology side, who are your competitors, sir?
In cosmetology?
Mm-hmm.
Cosmetology, there are a lot of companies in India. Where Glenmark is there, Mankind is there, then Hegde is there, then Curecia is there, and there are a lot of companies. Actually, this is one segment which has been identical to the oncology only, because the products are not available you are not making product available in the chemist. Every cosmetology has their own chemist counters. So it is one segment which has actually been replicated by the oncology side. So that's why we are focused on this segment only.
Okay, got it. Thank you, and all the best for your future.
Thank you.
Thank you. The next question is from the line of Chirag Filoki from Ratnatraya Capital. Please go ahead.
Hi, good afternoon, Rahul. Thank you so much for the opportunity, and congratulations on a great set of numbers. Could you please share the usual half-yearly numbers for the 4 segments?
Can you share the half-yearly number? Yeah, top line and the EBITDA margins.
Yeah. So the top line would be for the second half you want to know.
Yes.
The branded sale would be 41.5 crores. CMO business is 68 crores. Export business is 30 crores. API is 11.7 crores, and Derma is 3.3 crores. So total comes to 154.44.
Perfect. Understood. This is super helpful. Just 2 questions on the margin side. The gross margins you explained are largely the decline is there because of the purchase of platins. Is that correct? Or could you quantify that a little bit? You said 15% of top line. Could you just help us understand what that impact was for this quarter?
In Chirag, the gross margin, if I say, it is witnessing a decline of 4%. The gross margin leaves the manufacturing expense aside. So the gross margin earlier was 53%, and now it is 49%. So there is a decline of 4%. And as Rahulji has said, that platins constitute somewhere around 16 to 17% of the total sales of our group. So that has impacted a lot. But if you see the EBITDA margin, if I consider the EBITDA margin with and without derma, so EBITDA margin is I would say that it was 25% in the last year, I mean FY23, vis-a-vis 22.6% into 24. So that means a decline of only 2.4% compared to the 4% decline in GP margin. So somewhere we have controlled the below expenses also after the GP thing, somewhere around 1%.
Understood. Very clear. Just to follow up on the margins, the other expenses, 27 crores in the first half going to 33. Are there any changes there, or is it just now or more run rate sort of a number?
Chirag, can you repeat your question?
Other expenses other than employee after gross profit, that has seen a little bit of an increase. I'm just trying to clarify,
that increase percentage wise is not a much increase. Percentage wise, that is declining.
Understood. Perfect. This is helpful. One question, Rahul, to your previous response, the 25-30 crores of capex, could you just outline that in terms of both timeline and in terms of what capacity would that entail for the oncology business?
See, the capex which we discussed was mainly for the cosmetology plant, and the timeline is by FY26 we should start the plant. And regarding the capex of around 7 to 8 or 10 crores, that is a total, that's an asset purchase that is called marketing authorization, product-wise marketing authorization. Once we are through with the Europe approval, so we'll be immediately going towards an acquisition of MA approvals. So this is the main capex required. It is not in terms of machinery, rather it is in terms of dossier bought from the market, particularly available in that market, so that we can immediately go and start the sales, which is a process of 3 to 4 years for registration.
Understood. Perfect. No, this is really helpful. Thank you so much. Congratulations on a good set of numbers.
Thank you.
Thank you. The next question is from the line of Akam Shah, an individual investor. Please go ahead.
Hi, sir. Just a quick, I think I missed your part saying that. So when are we planning to main board?
In next 2 months.
In next 2 months?
Yes. We've already started the process. In next 2 months, we'll be migrating to the main board.
Okay. And my second question was, how much is the capex we are planning for each division and combined?
The total capex we are planning is close to around 30 to 35 crores for next 2 years, but that will be all from the internal cash accruals.
30 to 35 crores. This will include oncology, dermatology, cosmetics, everything, right?
Yes.
Okay. And so we are through to reach our target of 450-500 crores. For that, we don't require any funds or anything.
No. But tomorrow, if we get an opportunity to have some JV with a good biotech facility, since today we have a presence, I'll explain you. Today, there are total 3,000 oncologists, and we are covering around 2,400 oncologists, 2,500 oncologists, out of which 1,800 oncologists are prescribers. So we have a huge market presence today. Even some oncology is prescribing only one product or half a product or giving only 2 prescriptions in a month, but they are our prescribers. So if we get an opportunity to get into the biosimilar in a JV with someone where they want to launch the product in India, or anyone is developing those, or they want some investment on the part of that, so we'll be going ahead with that decision as well.
You said biosimilar, right?
Yes.
So are we actively looking at that space now?
See, we are not actively, but it's not passive also. So we have spoken to certain people in case any opportunity comes. So we don't mind considering that opportunity.
So you'll be more of a CDMO player, CMO player, or how is it?
No, we will be landing mainly our own brands.
Own brands?
Yes.
Through direct?
Yeah, through direct sales.
Direct sales. Okay. Got it. And in terms of product launch in terms of dermatology and cosmetics. Can you talk on that? So how many products are we planning to launch?
Ashutosh, can you give a brief about that?
Product launch as of now, this financial year, just recently we have launched 5 products. Then basically into hair care, then into psoriasis, skin brightening, so we are more into cosmetology. So first of all, we would like to build up these brands because we have seen good success in hair care segment, in sunscreen, in moisturizer. So we want to build up these brands first, and then we will look into the another brands.
Okay, thank you.
So yeah.
Yes. Yeah, go ahead. Sorry, go ahead.
Yes, sir. Does that answer your question, Mr. Agam?
Yeah. Okay.
Thank you. The next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Yeah. Good afternoon, gentlemen. Thanks for opportunity. So thanks for explaining the detail about the complexity of the business. Still, we are not sure of 100% understanding. For that, we may need your personal appointment also. So my question was regarding last time you highlighted about your increased presence in Tier 1 and Tier 2 cities, and also international expansion in Brazil, Latin America, CIS. Can you highlight upon that? What's the progress on that side?
Okay. So, Ashutosh, you give a brief about the Tier 1, Tier 2 taxi cities, and I'll take up the export part.
Yeah. So Tier 2 and Tier 3, we have now recruited people in the last quarter of the financial year. So basically, headquarters like Mangalore, Coimbatore, Raipur. So these are the small towns, Ludhiana. So we have recruited people, and we have started, now we are witnessing sales generation from those headquarters. And prior to that also, we started few headquarters wherein we reap good benefits out of it. So this is a continuous process, and we are going to continue going aggressive in Tier 2 and Tier 3 cities apart from Tier 1.
Right.
Thank you.
Right. Regarding exports, yes, we have started filing dossiers in these countries. In Colombia, we've already filed around 10 to 12 dossiers. In Mexico also, we have started filing dossiers. We have given around 24 dossiers, and this month only, we are traveling to this part of the continent, and we are taking an update from all our partners. In Brazil, also we have filed around 6 dossiers, and again we are traveling there, so we'll be having feedback from them. Then we are getting the registrations. Already, apart from these, we've already got 5 registrations in Peru. We have done business last year, and we've got business this year as well. Business estimate this year as well. We have also got some few registrations in Guatemala, in Ecuador, and in Nicaragua as well.
Any plan to enter regulated market like US and UK?
Yeah. So first we have planned to enter the Europe market, where we have an audit planned in September. And after that, we have to go step by step. But recently we have got our plant audited, the beta plant audited by a US FDA regulator. So he was in opinion that you can go for a US FDA audit immediately, but we are not in a hurry as we first want to establish ourselves towards in the Asian market, like specifically Southeast Asian market, Latin America market, and then thereon move towards the Europe market. After that, we will go. Definitely, we do have a plans to enter US market in 3 years down the line.
That's great. So my last question was regarding our API. What's the percentage of total right now we have reached in API? And what's the target to reach in next 2-3 years?
See, the number of products we are manufacturing API, almost 70% of the API consumed by Beta and Adley is produced by our backwardly integrated only. And the remaining, whatever new developments or new products which are going to launch in the Indian market, especially the PARP inhibitors, so those products will be developed in our API plant and will be delivered to our formulations plant so that we can be the first one to launch those products in the Indian market.
Okay, can you highlight what's the opportunity of that product?
The opportunity, these are these are mainly the off-patent drugs. Each product has a good market size and on a specific indications. So that depends on the product to product wise. Then secondly, we are also in a process to develop 2 or 3 products, which will be like first time in the Indian market. And out of those 2-3 products, we have developed 2 products. One product is under development, but again, it's not about the launching. The launching is through the formulations only, and the procedure is the whole procedure is to take an approval from DCGI, conduct and bioequivalence, so that the total procedure, the total timeline takes about 12 to 18 months in a current scenario. But as you said, the opportunity is huge. That's why we have selected these products and we are working on these items.
Okay. So what is the R&D team?
R&D team in API, we have close to around 6 people, and in formulation F&D, we have around 7 people. The total team stands around to be 13 people.
13 people. Right, sir. Thank you for answering my questions, and good luck to you.
Thank you. The next question is from the line of Pratik Chadda from Guardian Capital Partners. Please go ahead.
Yeah, hi. Thanks for taking my question, and congratulations for a very good set of numbers. I have a couple of questions, first on the margin side and then on the export side. Right. So on the margin side, as you mentioned, the platinum forms 16 to 17% of your total sales, and the prices have sort of affected the margins in a way. Is there any other product which forms a sizable component of your raw material basket, and which can be easily sort of tracked externally as well? And second question on the exports is, right now we are at 41 crores of exports on almost a 295 crore base, which forms approximately 15% of your revenue. I think there's a lot of effort being put in across the globe in terms of new registrations and new dossiers. So, can I get a 3-year view, 3 years out, where are you looking at exports as percentage of your total sales, assuming you are guiding a 25% sales growth? And what is the margin in these export business? Is it better than the domestic formulations, or is it pretty much where the domestic business is?
All right. There are too many things you have asked in one line, so let me just right from the beginning. So let's talk about first the margin side, right, regarding the patents. So first of all, we evaluate per product wise profitability every month. Secondly, patents become an important part of our chemotherapy treatment, so we cannot ignore these. Number second. Number third is, yes, of course, there are certain areas where we have already strategized ourselves that will be focusing more on these products, especially for the own brand thing, so that the profitability can be increased. Yes, because this particular year will be having 6 new NDDS launched. We are expecting the approvals by between October and March. So those 6 new NDDS, new drug delivery system, will be the first time in India. This will definitely increase the margins. Then coming on to the export side, yes, we have a very dedicated regulatory team. We have around 14 people working on the regulatory side. So we are filing our doses regularly. Yes, in markets like Colombia, like Mexico, like Brazil, and like Southeast Asia, the margins are pretty high as compared to the other non-regulated markets like Africa. So we have put our focus on these markets, and definitely you'll see a huge upside in next 2 to 3 years down the line, where export revenue will increase and the margins will substantially increase. And the target, what we aim in the future, is that export should contribute around 35% of the total business volume.
Yeah, that's pretty helpful, sir. Thank you. I'll join back in the queue.
Thank you. The next question is from the line of Piyush Jain, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. I just want to understand the whole concept of we are getting into this cosmeceutical business, because what I understood is you said April month we crossed the 1 crore sales. So maybe this year maybe we will be doing around 15 odd crore, or maybe a 12 to 15 crore sales. So what is the scalability aspiration of the management of this business? Because your existing business of oncology and all, everything, we are at the run rate of around 300 crores, and which we expect to be in next 2 years, we will be around some 450 to 500 crores. So this business will remain a smaller portion of the overall scheme of things, or this business has a size and scalability to become 100 crore in next 2-3 years, or what is the guidance or view here?
See, cosmetology business is one of the very unique business in Indian market. Today, we are a population of 150 odd crores, out of which, as the economy is increasing, everyone has a paying capacity today. And most importantly, if you have any skin irritation or something, you go to a cosmetologist or to a dermatologist. So they have their own pharmacies. So this was my initial talk always, that this division comes in line as per the oncology sales only. The process is absolutely the same. In oncology, we only have to deliver the product from a stockist to a patient. It's the same. If you're going to meet a customer, then he is our doctor. He is the only customer who's going to buy the product. So this is how the scenario runs. Then, if we see one more thing, if we see the MAT across all the segments in India, as per the April is concerned, the highest CAGR is neoplastic, of course, the oncology, and the second highest CAGR, the growth is in the derma segment only, because everyone wants to look good, everyone wants to have a better product. There are a problem with the hair right now. So the one division we have captured right now is more on the hair side, not on the beauty side. So this is, as Ashutosh said, so our focus is towards the hair, which not every company has focus in India. And looking into the future of 450, 500 odd crores of top line, yes, dermatology, our cosmetology will contribute close to around 30, 40 odd crore business in that.
So what will be the profitability you achieve when you reach 30 to 40 crore of business? And second thing, this will also be a doctor prescribed way of sell, or
this is totally doctor prescribing business. This is totally ethical business which we are doing. We have a team force of 100 people whom they are visiting each and each individual doctors, and then once a doctor approves the product, then that product is being prescribed by a doctor to a patient. So this is the same way each and every, like even cardiology or endocrinology work is the same segment like which cosmetology and dermatology works.
Then there is so much of competition there. There is a Glenmark, there is a Mankind, there is a Dr. Reddy, and so many other unknown startup type of companies which have come with so many derma products and all. So, like you said,
the market is huge. If the market is increasing, and there's a competition in everything, right? You have to create your own space. We have delivered in the past as well how to create a brand. We have created a brand in oncology. So we know the process, and we are in a process to create a brand in dermatology as well. Next 4-5 years, when you see the figures, there will be a substantial figure in the cosmetology segment also. And the cosmetology brand is one brand which will grow continuously. Supposedly, let's take an example of a sunscreen. Today, doctors are prescribing one sunscreen. That becomes a brand, word of mouth. So one person is using, will tell to some other person. So this way, these brands are created. And we know how to create that, and we are aggressively working on the same, so that this portfolio, this segment which we have chose, and we are working aggressively, this segment we have chose should represent, yes, BDL has two separate segments. One is oncology and the second is cosmetology.
Okay, and the margin will remain same, similar line of what Beta right now doing is around 24 to 26%.
Yes, 100%. Yes. The margin will be at the same line as we consider in the oncology segment.
Okay. Just one last thing, and why I'm asking this competition, and you said, yes, I know Beta has developed and you have all the competence, something, because in past, I remember correctly, Glenmark had sold its derma division to, and Eris Life Sciences has bought it. And I saw that growth number or something last 4 or 5 years, the segment hasn't grown. I don't know about whether this is related to hair or this is related to skin or something. But what I'm trying to understand here is the Glenmark size of the company of the Glenmark and Eris Life Sciences, they are also struggling in the growth of the segment. I don't know about the reason. That's what I'm trying to understand.
every company has their focused areas, right? And maybe Glenmark has some other focused area, and which the other companies don't have. Maybe just now Torrent bought Curatio, right? And why they bought? Because they want to develop and they see the upside potential in the dermatology and cosmetology market. There are small companies which are doing a sale of around 50 odd crores, 100 odd crores, and they've created a brand today. You go to a cosmetology, you'll come to know if we prescribe one brand that this is also prevalent in the market. So it depends on the company's strategy. It depends on individual company, how they are marketing and what focus they want to put on. Glenmark's strategy has always been on the antiretrovirals over that side, mainly concentrated on the regulated market side. So maybe they have shifted their focus and they just want to concentrate on them. I cannot comment on the same, but what we see ourselves, we have already designed a strategy to make it a good brand.
The point was the
Sorry to interrupt, sir. I would request Mr. Piyush to please follow up in the question queue for further questions. Thank you. The next question is from the line of Sunny, an individual investor. Please go ahead.
Hello, Rahulji. Am I audible?
Yes, you're audible, please.
Yeah. So if you can just, again give a breakup of your entire sales of 154 crores among the 4 divisions.
You want the breakup of the entire year, right?
Of the entire year, right.
Okay. So, Lebanji, can you give the breakup, please?
Yeah, Mr. Sunny, the breakup is branded sales 82 crores, CMO 140 crores, exports 46 crores.
No, Leban, branded is 89 crores. Branded is 89 crores.
You're including Derma.
Yes.
Okay.
Yeah.
So Derma is separate. All right. You give, please. Maybe I didn't this.
Yeah. So API 21 crores, exports 46 crores, branded 6.83 crores. Sorry, Derma 6.83 crores.
Okay. So the branded total including Derma is 89 crores.
Yeah, branded total including Derma is 89 crores.
Okay. So the margins are more or less similar in all these 4 businesses, or is it more in the branded space?
See, branded sales always have a more margin. It is somewhere around 33 to 36%, which branded has. 28 to 32% is exports margin. 15 to 17% is CMO margin. API, we have a standalone balance sheet, so it shows me the correct margin automatically. So that is somewhere around 22 to 23%. And Derma, we have already told you that 65% is the gross profit, and we have witnessed an EBITDA loss of 4 crores in Derma division.
Right. And so lastly, we are moving to the NSE main board around June, you said, June 2024.
Yeah, June or July. It is a process. So we've already initiated the process. Maybe another 2 months we'll be on the main board.
Okay, sir. That's it. All the best to you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Chirag Jain from Yogya Capital. Please go ahead.
Yeah, thanks for the opportunity, sir, for the follow-up. Sir, I had a question regarding the first on the molecule side that we were discussing about. You mentioned about some molecule you were the first one to launch. So what was the actual size in India before you launched, and what was the price erosion after you launched? That was the first part.
So I'll tell you, in oncology, if an innovator launches a product or any life-saving drugs, the market size is huge. But once other branded products launch, after it becomes off patent, the market size definitely reduced by 1/8.
Okay.
But the thing is that there are hardly any players to launch that product. So that's a process, and mostly all the products, all the companies, we are the only manufacturer. So we launch all together, and thereby we become almost the first one to launch that, and we try to take the maximum market share out of it.
Okay. And as time progresses by, how much the erosion increases by? On average?
No. See, it's not about the market erosion. It's about the number of prescriptions or number of patients. Because the number of patients remain the same,
The only difference becomes is the innovative, the price, the MRP difference, the price of the innovator and the price of like our generic branded. So where even though we have the erosion is there, but still we try to make a GC in our own brands around close to 80-85%.
Okay, that's high enough. Yeah. Also, sir, there was a recent announcement, it dated 7th of December. It has mentioned CapEx. It was the same that we are doing of 35 CR
in
oncology.
In December, no, that CapEx, what we did was we came up with the separate line for suspensions line, syrups and suspensions. So that announcement was that we have started the production of our suspension line in oncology only.
Thank you, sir. And sorry to interrupt. The next question is from the line of Santosh from Investment Handle. Please go ahead.
Sir, quick question regarding the migration. As you said, it's in process. Wanted to understand, to improve liquidity, are you planning to issue any bonus or split the share as part of the process?
Till now, we have not considered that, and since we are just focusing on the business side and splitting and all, we have never discussed, not even thought of. It's only right now just to focus on the business side and just to migrate on the main board so that we can be listed on the main board. The second is that just focus on the business, focus on the sales, focus on the profitability. That's the only thing we are talking about.
Okay.
Thank you. Ladies and gentlemen, that was the last question for today's conference call. I would like to hand the conference over to the management for closing remarks.
Thank you, full capital teams. And since it's a regular learning process for everyone, right? And we understand that we have achieved the top line, and rather we have delivered the best. The commitment which we gave in our last call, we have delivered rather better performance than that one. So we'll keep on delivering a good results for the coming 3 to 5 years down the line. And as an assurance, we will give the market the best qualitative and the most innovative products in terms of oncology is concerned. Thank you.
On behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you. Thank you.
Thank you.